online. Talk to people who are doing the thing that you want to do. Maybe there's somebody who is an active investor that you know about or through your network. Maybe there's a local real estate meetup. Maybe there is a podcast that you listen to 10 different episodes to. What are they talking about? Maybe there's a conference coming up in a couple months. It's a short flight away. Just go. Just go be a sponge. Maybe there are, maybe there's an accountant or a group of accountants. And maybe I should highlight the fact that when I started networking back in 2017, that was kind of the first thing I did is I went to a conference. I went to a few, but one of the first conferences I went to, I just went there, tried to be a sponge, started networking with a group of accountants who have a lot of real estate investor clients and just said, hey, is there anybody else in your network I can talk to that can do this? Or what are these guys looking at? What are they focused on? What sort of things should I think about here at the outset if I want to become a real estate investor someday?
Your relationship with money matters. I'm Michelle Perkins, and this is the Money and You podcast, where I will be breaking down your relationship with money, offering tough love money tips, and a money dating plan that will focus on lifting the barriers to success to help pave the way for better money practices and increased wealth. It's time to take control to live a limit-free life. It starts today. Hello, hello. Welcome to the Money and You Show. I'm Michelle Perkins, your host. Super excited to have you here today. Super excited to have the guests that we have on today. We're going to talk all about passive real estate investing, but not what you've heard before. There's going to be a lot of big variety of ideas that are going to be covered so that, you can also learn the value of passive investing and how you can get yourself into it on several different levels. You might have some ideas of what that means, but, stay tuned and listen to what we're going to talk about today, because I think it's really going to spark some great new ideas. And I'm going to introduce our guest for today, and then we'll jump in. So our guest is Paul Dirks. Paul is on a mission to help thousands learn about passive real estate investing and embrace out-of-the-box thinking when it comes to wealth building. His firm, Cityside Capital LLC, helps investors access passive income investments in multifamily, self-storage, industrial, and other commercial real estate markets, partnering in over $1.7 billion of acquisitions to date. Paul is a co-host of the Passive Income Brothers podcast, a top 1% weekly show that takes the fears out of real estate investing through education and interviews with successful real estate professionals. A licensed financial professional with over 20 years of investment experience, he is a registered representative of Finalis Securities, LLC, and a chartered financial analyst chart holder. To learn more about passive real estate investing, we have Paul's contact information there, and you can visit his website or give him a call. Welcome, Paul.
Hello, Michelle. It's great to be with you and great to be with your listeners.
Yeah, great to have you. I'm super excited about this, and I think we both have an interest in bringing a wide array of financial educational topics to people. And I love what you're here to talk about today, because I do think it's a bit of a mystery for people. How everybody hears the term passive income, and you go on social media and everybody's got their own idea of what that means. And so I think it's a really great topic. It is an amazing thing to help people to find that in their lives. But of course, like anything with money, it has to fit your personality. It has to fit into your lifestyle. And so, let us in on, how you got into this.
Sure. Again, it's a pleasure to be with you. And, maybe before I dive into the passive real estate investing side, which is admittedly a bit of an advanced topic.
Yeah.
Maybe I could kind of start with how I even got here.
Right.
Go back to high school for me in suburban Maryland. And I'm working for my dad, who's a financial advisor. He's actually still an advisor. He's been doing this for 37 years now. And when I was a high schooler, I had the chance to see how hard he worked to serve his clients, to help them set up their financial goals, find investment opportunities, and be a steward of his clients' capital through up and down markets, right? I always found that to be an incredibly noble line of work. And I knew that I always wanted to go in the direction of investments when I came out of school. I I wound up diving deeper into the investment side of the business as opposed to the, I guess you could say front-facing client side of the business. And I worked on Wall Street for nearly 20 years, working in research and in portfolio management. Very exciting work, very rigorous work, and it prepared me well for what I'm doing now. But in the last few years, I became very, very interested in real estate investing. I realized that there are investment opportunities available to investors out there beyond just those typical stocks or bonds and things you might see on CNBC and in other financial media. There are other investment vehicles out there that could be of interest, provide diversification in portfolio, maybe cash flow, tax benefits, and other considerations. But I realized that there were a lot of ways that those investments were not accessible to individuals. Didn't really know how to get started on that. And I wound up taking a bit of a circuitous route here. I did invest in real estate investments as an active investor, where I owned properties and was working with a property manager to manage those. But I've ultimately realized over time that there's a great opportunity in passive income investing, not just personally as an investor, and I am one, but also for helping educate others, individuals and families on passive income investments and why they may be a fit in what they're trying to achieve financially. And really, at the end of the day, there are a lot of different ways to get to some of your financial goals. I'm offering access to just one possible path, but I want to, use my platform and use our company's, access to show individuals that there is more than one way to grow your wealth. It does not always have to be entirely on Wall Street or at the whims of the stock market. And that's what passive real estate investing can do.
Yeah, I love that. And, coming from your background, was it hard to kind of open your mind to other things, or were you just attracted to that anyway?
Very slow moving. Let's put it that way, right? So I mentioned working with my dad, and that was back in high school. I was, 15 at the time when I started working with him. It wasn't until I guess I was, easily 20 years later to when I actually pulled the trigger on investing in my first rental real estate investment property. Some of that was just this increasing dissonance between learning about stock market, equities, traditional paper assets, but then also realizing, and I'll tell you really what the biggest catalyst for me was, and I'm sure others on your show have heard of this book. I read Rich Dad, Poor Dad. And when I read that book, it just set off this light bulb in my head that here I am, my wife and I both working in financial services, and we had no cash flowing assets and really had no path aside from just working our regular W-2 jobs to expanding our income streams beyond just those two jobs. And both of us, again, working in finance, we were tied directly to the stock market, and realizing that, in the event of a major downturn, we didn't really have other ways to earn money, or we were at great risk of both losing jobs and a large portion of our savings in one fell swoop. Also, we live in Long Island, New York, which is a pretty high cost state. It's a state where it's taxes are high, and where it's also not exactly very friendly to real estate investing. At least I find it to be harder, more difficult market. So it took me some time to realize and identify an attractive out-of-state market where demographics are more supportive, where some of the laws and regulations that support real estate investing are a little bit more landlord friendly. Mm-hmm. So yeah, it took time. And, as your question kind of makes me think, there were a few conversations with my dad where he doesn't necessarily understand what I'm doing, but at this point he certainly sees it full circle, that real estate investing is just another path. It's another way. I think it's a great complementary way to some traditional or, maybe more conventional ways of investing your dollars and trying to grow your wealth.
Yeah, thank you. I talk a lot on this show about your relationship with money, your mindset around money. So that's kind of a big shift, I think, given you're in that world of equities and stock investing, and then to kind of because there is risk all over the place. So when you switch from something that to something that's a little more of an unknown, How did you was it easy, or did you have to kind of do some mindset shifting of your own?
There was some mindset shifting for sure. There's also saving dollars and trying to, go over notes and think about it. When I think about when I read that book, Rich Dad Poor Dad, it was early 2017. I didn't actually buy my first investment property until the summer of 2019. We did expand our family at that time, but also saving money. And also, the one thing I did do that was very helpful is I started reaching out to individuals who I found through networking, through conferences, and also, frankly, listening to podcasts, kind of doing some self-education, going on LinkedIn, seeing who I may know in the network or in the space, and just kind of trying to be a sponge. You go to these conferences, especially if it's a smaller or regional real estate conference or meetup, you find other individuals who are like you, maybe a few years older, maybe just a step or two ahead of you on this kind of path. And so by just kind of putting yourself out there, not being too timid about, about your interests, I think what we all, and I have many different things that I want to share on this topic, but one thing that's kind of a pet peeve, or at least something that I've noticed, is we're in this country so siloed when it comes to thinking about finances. Of course, we're all maybe embarrassed and it can be a comparison game. Don't get me wrong. But when it comes to certain asset classes, or it comes to, say, longer term goals, say, hey, I want to someday try to become financially free, or at least take steps to reduce my dependence on just my W-2 income. Those are very general things. And we need to embrace the fact that we're not the only ones that have those, aspirations, or maybe the limiting beliefs at first. And so the nice thing about the real estate investing community is that it's a huge market, a huge pie. Not one person or one company could ever own it all. It's a very different kind of mentality than traditional Wall Street, where it's more dog eat dog, where it's more of a zero sum game. I feel as if real estate investing and the real estate investing community are much more inclusive, much more cognizant of helping each other out, and genuinely trying to see everybody prosper. So that navigation that took some time, then, and just by putting myself out there, I gradually whittled down some of those limiting beliefs and embraced the fact that I kept waking up every day with this itch that I need to scratch, that I need to get out there. I need to explore this real estate investing thing once and for all. And I did not come from a family with any, brothers or sisters or cousins that were real estate investors. I had one uncle that did, but that was just because it was a first time home, 30 years ago, first time townhome. He just never sold. And so that really wasn't enough. I needed to get out there and learn it and feel it and experience it myself. And that mindset change took some time. It does not have to take anybody as long as it took me.
Well, thank you for being honest about that. I think it's really interesting because I myself am getting involved in a little bit of it. And I've been surprised how it's been waking me up at 3 a.m, like in weird worries are flying around in my head. And you kind of know better than to let myself run on, my imagination sort of take over. But yeah, it's just been an interesting thing because intellectually, I do this podcast. I know how wise a move it is, and I know enough about it. But having not done very much of it, I've done a little, but not kind of on the scale that I'm thinking about. And it's it's been a bit of a mind game, I have to say. So kind of took me by surprise because you sort of think, oh, well, it's an investment, just like, they're all just investments, and there's risk and there's reward, and, but they're very different, actually, is what I'm.
Right. And I couldn't agree more. And what I would just add, which is a bit of a mindset shift in and of itself, is we are all kind of trained through, you think about the advent of the individual retirement account, right? The 401k accounts. That stuff started coming about 50 years ago. That construct is really around Wall Street or paper assets, stocks, mutual funds, bonds, ETFs now. those are only some of the assets that the tax code allows us to invest in terms of our individual retirement accounts or our 401k accounts. Mm-hmm. However, companies choose which custodians to work with. And those large custodians out there many of them are at this point gargantuan in size, and they choose the assets that they themselves can better control and monetize, and that are much more liquid. Passive real estate investing and real estate investing in general is illiquid. It's the biggest single, point of differentiation, and you could say a con to that kind of to that in particular asset class. However, there are many benefits to it that do not come with Wall Street paper assets. So the mindset shift that I'm speaking about is understanding that it may be easy to have one single financial advisor, and don't get me wrong, there are many, many, many good ones out there, my dad included, but not all of them are looking at all of the asset classes that are available to you, and that we ourselves, I think, have a duty to ourselves to think about what are the other possibilities out there, and are there other assets that could be of interest. Maybe there's a small part of your portfolio that can be in something illiquid, that maybe you want to diversify away from Wall Street, that will give you either some unique tax benefits or cash flows. Those are all those kind of bigger questions and technically it's within our control and within our reach. It's just we are programmed through society, through mainstream media, et cetera, to just fork it all over to Wall Street and we'll see it in 20 or 30 or 40 years.
Yeah. Wow. You just nailed it, because while you were talking, I'm like, that's what's waking me up at 3 a.m. It's the fact that the liquidity is going away. Like I hadn't really, I've gone back and forth, but that's the whole fear is, okay, my money's tied up now. And if I need it, yeah.
I will say this. It's not just, the liquidity thing or the illiquidity that comes with real estate investing, as any, homeowner can attest. How quickly can you actually sell your home? It's going to take you a little time, right? How quickly, if you invest in a property or in a syndication, say owning an apartment building or a self-storage facility, you're going to be in it for several years. So again, it should not be, in my view, should not necessarily be for the preponderance or the majority of your investment portfolio. But for some of it, absolutely, there could be a place for investing in real estate. And when you think about asset diversification is not necessarily, you might say, a wealth creator as much as it is a wealth preserving strategy. And we're at a time when the equity markets here in this country are at or very close to an all-time high. We are seeing some pretty crazy valuations of the Magnificent Seven tech stocks out there. And we're also seeing a lot of fractures, especially in the private sector from an economy perspective. So when you think about asset diversification, I think a case can be made that this is an interesting time to consider that. And then I would also go as far to say, if we have a recession in this country, some would argue we already are, but if we have one and maybe we have more resetting of real estate values in this country, well, how are you positioned? Do you as an investor have the opportunity to participate? Maybe you'd like to. Maybe you'd like to diversify your real estate exposure from your home state to other states in the country where maybe there's faster growth or maybe it's a different cost of living, different demographics. So these are all kind of some of those questions that I think a lot of us kind of have in the back of our minds, and we've always wondered, how do you get started? Is this a fit for me? Do I have the amount of resources in my reach to get started? And here I am to say, for many of us out there, you might. And if you do, educating yourself and reaching out to others in the network and through shows like yours is a way to learn and to determine whether or not it is something you should look into.
Yeah. Thank you. That was really well said. Speaking of that, let's dive in. Let's dive into, I could talk all day about my own mindset issues here, but I want to not do that. Mm-hmm. So if you could share with people, because, so let's just talk kind of a little about your start. So you started with like a property that you invested in that you were renting, and then kind of where did you go from there, and what are you talking to people about these days?
Sure. So the Cliff Notes version is over about a 4-year period. I purchased 7 rental properties, later sold one, so 6 total that I currently own. They're out-of-state properties. They are in the multifamily space. And my strategy all along was with those properties, I worked with a local contractor and an outstanding property manager who helped me take these properties that were neglected and bring rents up to a market level. I could see I wasn't trying to recreate the wheel. I was trying to take those properties, make them habitable, make them, just up to kind of what the neighborhood standard was. And I could see those cash flows growing. And those cash flows become, at this part, for our family's household, we rely upon them. They are a part of our functioning family, financial ecosystem. Mm-hmm. When I was on Wall Street for, in totality, really over 20 years, and I left my Wall Street position last year to go work with Cityside Capital, what I realized is that my experience and my acumen in understanding real estate markets, the residential and commercial construction cycles, understanding through my work in terms of fixing up small multifamily properties that I own, I realized I could take some of those analytical chops and apply them to the world of passive real estate investing. When I talk about passive real estate investing, I should maybe step back to say you really kind of have 3 buckets of real estate investing. Active is where you own a real estate property and you manage it. You are the landlord, you are the property manager. Very hands-on. Some people can do it. Many of us, if we have a busy job or little kids, might be trickier. You may have that kind of second bucket, which I kind of call actively passive, where you own the property, but you have a property manager that you employ that manages the property for you and kind of handles a lot of it. And then you have that passive real estate bucket where you serve as a limited partner and you're investing in something like a syndication, or maybe it's a fund where you're investing in, could be apartment buildings, could be self-storage, could be industrial real estate, other commercial real estate asset classes. All of those are possibilities in those syndications or in those funds. Now, one thing I do want to highlight is with passive real estate investments, syndications and funds, again, they are illiquid. They tend to be, minimum investments might be, say, $50,000 or more, sometimes $25,000. Well, oftentimes those are offerings that are specifically for accredited investors. To be an accredited investor usually requires a degree of net worth of $1 million, excluding your primary residence, or if you're an individual filer, $200,000 in annual income. If you're married filing jointly, it could be $300,000 up, or some FINRA licensed financial professionals. So those are the standards to become accredited. 18 to 19% of U.S. households are accredited. So you can say 1 out of 5. It's more people than you might realize. But those individuals can participate in those syndications, in those funds. There are a select number, where non-accredited investors can participate. But for those who are accredited, you have access to a larger number of offerings. And the last point I want to drive home is these are private securities. They are real securities, though, just like a stock is a public security. In a stock, you're owning a small ownership in a business, but it's liquid and the stock price is on a public exchange. We all can see it go up and down. Of course, the movements in that price are driven by some combination of that business's fundamentals, and then also overall stock market volatility could be, quantitative or algorithmic factors that are driving that price action. And then you have private securities that are not traded. They're illiquid, but you are owning part of a business. It's a very different business. That may be a business of owning one apartment building, or it could be the business of owning a fund that owns 5 or 10 different buildings. Those are the basic elements of passive real estate investments. And like I said, there's a lot there. It took a while to kind of get through it all, that little monologue of mine. But it's important for individuals to understand you don't have to actually own a property as an active landlord if you want to invest in passive real estate.
Yeah, thank you. That was a great monologue, because it really was you taught people a lot with that. And So with respect to the accredited investors, accredited. So are you saying that you have to be one to get into this, or are you saying there are avenues for people who are not?
There are avenues for those who are not. It depends oftentimes on the size and the nature of the offering. And what I should maybe kind of step back to, as mentioned, when a company wants to go out and raise money, we're all used to the initial public offering or IPO process, right? To do an initial public offering at this point is terribly expensive, a very, very laborious process as well, very, very long process. It's not attractive for many small businesses. So there are exemptions that you can apply for and apply under to raise capital that are not a public offering. Those exemptions fall under Regulation D, and then under Regulation D, there are different types of offerings. The two most popular are 506C, 506B offerings. 506C offerings are offerings for accredited investors only. 506B offerings can include some non-accredited investors. So, to answer your question, there are opportunities for non-accredited investors. There just simply aren't as many. But what I really want to kind of implore here as well is that, say you're unsure of your level of accreditation. Well, maybe there are other syndications or other, deal sponsors that could even be smaller or more local in your market. Maybe it's somebody who's just starting out in terms of syndicating and trying to raise capital to buy their first large multifamily building. You might have the opportunity to contribute. Alternatively, if you are accredited, maybe you're thinking about, well, I may not have a lot of liquid capital available, but perhaps you have a 401k plan that was at a former employer, and maybe that 401k plan could be rolled over into a self-directed IRA. What's interesting about the self-directed IRA vehicle is that, we're so customized, we're so accustomed to keeping assets with Wall Street firms only, because they're the largest firms out there and they're the largest custodians. However, there are self-directed IRA custodians that allow you to invest in private placements and a whole large assortment of other investments that are not your typical Wall Street paper assets, but instead real assets. And those accounts are available to anybody who wants to take an old 401k account and roll it over into that self-directed IRA vehicle. So even beyond just being accredited versus non-accredited, it gets back to that mindset. Am I controlling all the avenues and all the asset classes that I could have access to? Or am I only following just one path? Have I thought intelligently about what I want to be invested in and what those investments are actually providing? Or am I just kind of on autopilot about it all? Those are the questions that, for me are very important to ask in terms of just probing where I am and understanding what is my portfolio doing for me and where is it going to leave me 5, 10, 20 years down the road. There's a lot of tools and resources at our disposal today that just were not available 5, 10, 15 years ago. So I just want to mention that, it's important to understand there's a lot more out there beyond just what we see on the financial media, on TV and the like.
Yeah, that's a great point, because I don't think people think that way when they're looking at their IRAs or whatever. So, yeah, I love that. So that's something to bring up with your planner, I guess, if you're interested in going that route. Because I don't know that conversation has ever come up with any of my planners. Like, would you like to look at some of these other types of investments?
Well, if I may interject, not many financial planners or financial advisors either work for firms that have these alternative investments on their platform, okay, or maybe they don't have the in-house experience or interest to have personnel that can research and recommend due diligence on these investments. Many of those I'm speaking about are, idiosyncratic. They may involve, we all know real estate's a very local market. That's a lot of little tiny individual markets to kind of monitor. Yeah. And it's difficult. And many firms also realize, many of the large Wall Street firms realize they can't monetize those as easily because they don't trade that often.
Yeah.
They are illiquid. They could be a buy and hold or buy for 5 or 10 years and hold kind of investment. They can't make a lot of money off of that. So many financial advisors and planners simply aren't trained, aren't interested, can't make a lot of money off of alternative investments. That's, I think, the root of that lack of discussion, and why I believe it's not just necessarily one advisor, but maybe a handful that could be helpful in painting a broader financial picture for an individual. You could, in my case, I certainly have the majority of my assets with the financial advisor, but not all.
Yeah, very interesting. This is really interesting. So, okay, I understand better. And so, where would you go if you had an interest in this? I mean, who do you talk to, and how do you get started?
So this is a great question, chicken and egg question, perhaps. I think it depends a little bit on, again, risk tolerance, on evaluating where you are, taking inventory of what investments you have. Are you happy with your financial advisor? Is that person offering you the degree of advice, counsel, performance that you're looking for? There are many other financial advisors out there who are, there's certainly a large competition for your assets, but are they providing you the kind of, holistic view that you're looking for? There are some out there, and I've certainly talked to several of them, who are, looking at alternative assets and see the way in which it can play a role. But a financial advisor only can kind of work with, I would say, in the whole scheme of the whole spectrum of investments, they are only offering you the ability to trade and work on some of them. At the periphery, or on the more to the tail ends of those spectrums, which include illiquid investments, you need to consider looking in other directions. In my view, I find this is kind of the gap in the market where a lot of financial advisors don't want to go out there, especially if you work for a larger financial institution. Maybe there is another financial advisor who's a registered investment advisor, an RIA firm, where it's a financial advisor who has his own business for works. Maybe there's a few of them together. Some of those smaller firms I found tend to be a little bit more encompassing or open to alternative investments. And then if you want to speak to somebody like me or my partners at Seaside Capital, what we do, and this is our mission, is to educate investors on passive real estate investments. And for those who deem it to be an appropriate investment vehicle, we can provide access to certain securities. So we are FINRA licensed registered representatives. I have my Series 7, which is the same license that, a financial advisor has. But I'm not selling public equities or, mutual funds. I can sell private placement opportunities. Okay. So there is not a huge market of registered representatives out there. And maybe I could offer a quick reason why that may be the case, aside from the fact that Wall Street and Wall Street firms have made so much money over the last 40, 50 years in really consolidating investment assets in individual retirement accounts, 401k accounts. It was only about, at this point in 2012, when the Jobs Act was passed, where there was the legislation that allowed or permitted there to be mass advertising of some of these accredited investor deals. That was never permitted prior to 2012. So you had decades of time where this sort of thing was kind of a little bit of an old boys club type of investment. And it's been in recent years where that has really taken off, because we've had the expansion of the internet. We've had an expansion of out-of-state real estate investing. We've had more tools, investor tools. We have a better understanding, I think, of demographics by the individual American investor. And I also think we've had a bit of a realization that when you look at Wall Street, when you think about the number of publicly traded equities out there today, it's less than half of what it was in 1990. And you have a large portion of Wall Street equities and equity markets that are driven by, I think, non-fundamental drivers, such as ETFs or algorithmic trading. And so there's a lot more correlation. There's a lot less new business, a lot fewer businesses that are going public. And so investors are looking for different ways to deploy their capital that are less correlated, maybe more local, maybe a little bit more controllable in certain senses. And all that kind of points to real estate investing. So to kind of get back to your original question on who you talk to people in your community, talk to people online, talk to people who are doing the thing that you want to do. Maybe there's somebody who is an active investor that you know about or through your network. Maybe there's a local real estate meetup. Maybe there is a podcast that you've listened to 10 different episodes to. What are they talking about? Maybe there's a conference coming up in a couple months. It's a short flight away. Just go be a sponge. Maybe there are, maybe there's an accountant or a group of accountants. And maybe I should highlight the fact that when I started networking back in 2017, that was kind of the first thing I did. Is I went to a conference. I went to a few, but one of the first conferences I went to, I just went there, tried to be a sponge, started networking with a group of accountants who have a lot of real estate investor clients, and just said, hey, is there anybody else in your network I can talk to that can do this? Or what are these guys looking at? What are they focused on? What sort of things should I think about here at the outset if I want to become a real estate investor someday? And that who, not how, that there's a book by that title that I absolutely love. I think that would be a powerful strategy for anybody who wants to get started on understanding the gamut of real estate investments out there. And you just kind of look for people out there, pull on some threads, see what sticks, meet individuals. It's not difficult to put yourself out there. Just, kind of need to get over being timid like I was when I first got started.
Yeah, couldn't agree more about the networking and just getting yourself out there talking to people. It's, whatever you're doing, looking for a new job, wanting to invest in real estate, it's really the most important thing. And I love that you brought that up. And I love that you brought up accountants. I mean, I have a couple of accountants who are big real estate investors themselves. So,
right. Lawyers are a great resource, because obviously many of them they're used to dealing with contracts. They're used to dealing with illiquid situations or complex situations. I think that's another, another person in your network. Maybe also perhaps small business owners, individuals who themselves have managed real estate just by virtue of owning their own doctor's office, dental office. Maybe some sort of nurse practitioner or other small business owner. Those are folks who understand the mechanics of at least a small real estate investment, and maybe they have other contacts in their network or people who can speak about different asset classes. When we just have so many things at our fingertips today, and what I'm here to espouse is that everybody else out there is just like you. Has concerns or limiting beliefs or afraid of being, looked at like an imposter, right? All that is in your head. In the world of real estate investing, especially for those who are just getting started, it may seem scary. I'm not going to lie. Of course, it can be when you're starting anything new. But everybody else in this community has done it and can at least, I think, be a resource at the very least, if not somebody who can be somebody who accelerates or catalyzes you to take action and going in a direction that maybe you've always wanted to go.
Yeah. Yeah, this is just great. So, somebody's listening and they're thinking, I want to learn more. Well, they can learn more by calling you or checking out your website. What if they're ready? What if they're thinking, I really want to just dip my toe in here? I might not want to buy my own piece of property right now, but I might want to just, participate in one of these, kind of group situations. Well, is there any just kind of overall recommendation if somebody's, kind of ready to start?
Sure. I continue to think that networking and talking to individuals is going to be your best source of education, but there are many resources out there. There's a couple books that actually come to mind, one of which is called The Hands-Off Investor by Brian Burke. That was I think a seminal text in terms of talking about passive real estate investing, understanding those deal structures. I think that would be a great starting point for somebody that's looking to kind of dip their toe into at least understanding passive income investing. There are many different websites out there that, Bigger Pockets is a very popular one for more active real estate investing, but they too have some resources and part of their website that speaks to passive investing. There's many out there. Multifamily U is another. It's multifamily and then the letter U, like university.com. That's another website that has great resources on the multifamily space specifically. Self-storage income is yet another one when we talk about self-storage. I mean, self-storage in terms of being an industry and asset class, what's interesting about self-storage is it really wasn't well understood or appreciated 25, 30 years ago. But during the great financial crisis, self-storage was among the best performing asset classes. And lenders actually very much like the self-storage business model because it's a very relatively simple and transparent business to understand and to lend to. And as an investor, self-storage is interesting because as long as you don't have a brand new self-storage facility kind of going within the next 5 miles of where your facility is, you should have a pretty decent sense as to what levels of usage there could be and how your pricing can look. And so self-storage is an interesting asset class that we've all driven by those big facilities and wondered why are there so many out there? What is this about? Well, as an investor, you could dip your toe into a fund or into a deal where you're investing as a limited partner only in one of those facilities, and maybe it would help diversify your portfolio. Maybe it would help generate some extra passive cash flow. Maybe it also helps generate, and this is a big one, some tax benefits if you're using non-retirement funds to do that. Those tax depreciation shields can be pretty powerful when you start using a lot of those dollars. If you have the dollars to spend, those tax depreciation shields can build up and shelter an awful lot of income over a several year period.
Yeah, that's a huge conversation itself. So, yeah, I wish we had more time. So, I know you have this podcast, and do you have all these discussions on the podcast? Can you tell people about that?
We do. Yes. No, I appreciate that. So my partners, Tim and Greg Lyons, and we co-host the Passive Income Brothers podcast. And every week we highlight different either themes, topics, discussion points of due diligence that we do on operators that we work with. And also we interview a wide range of guests across real estate investing markets. So this could be, we obviously provide access to certain securities, but there are many different ways to invest in real estate, some of which we ourselves may not necessarily participate in, but we know that other investors and other listeners of our show very much value that diversity of opinion and just kind of knowing what's out there. We had a gentleman on a few months ago who does oil and gas investing. That's not a space where I'm myself particularly well versed, but I know a lot of our investors out there very much want to learn about oil and gas because they've seen the restrained supply of oil and gas developments in the U.S. in recent years. And they also can appreciate the fact that there's significant tax benefits that can come from investing in oil and gas exploration and production. So that's just one asset class. We have operators on there who provide turnkey rental real estate properties. Maybe you want to invest in a state and you don't even want to fool with being accredited or non-accredited, but you have a little bit of capital, but you want to invest in a different market on the other side of the country. We have guests on there that talk about that. So our podcast, we're at this point 115, 120 episodes. It's a great just variety show once a week of guests who come on and can just get you to think and get you to ask the questions that I'm trying to pose here today. Are your investment dollars working for you? Are they actually accomplishing what you want them to accomplish? Or are you simply just kind of socking it away, not spending the time to think intelligently about what your money's doing for you? We all have that choice. We all have that within our control. So our podcast is there to educate, and it's a lot of fun to do.
Yeah, no, that's great. And it's a super successful podcast by the numbers. So that's the Passive Income Brothers podcast. I will be subscribing. I want to learn. So, well, listen, Paul, this was a wealth of information. I think you've definitely opened people's eyes to some different ways that they can go and reasons why. And I just want to thank you for coming here today. There's a lot more to talk about. This is a huge topic. So I guess go from here over to your podcast and keep learning from you. But
I appreciate that.
Super interesting.
And I was just going to say, you know, maybe in closing, one thing I realized, and this goes back to my experience a few years ago. I realized that nobody was going to change my financial picture except me. And for a lot of us, there's a lot of things out there over the last few years that have happened that are not our fault. They're not at all. Some really big things, some really big social constructs that I think have been broken. But it is our responsibility to react to them and to take matters into our own hands where possible and to think about how we want to navigate our own futures forward. You know, we didn't necessarily have the chance here on our episode today to dive into some of the specific benefits in terms of how passive income can play a role in your life design. Yeah. In my case, passive income has helped me navigate a period of career change. It helps me lower my overall effective tax rate. It also obviously diversifies me away from just investing solely into Wall Street. So there are different reasons to explore, to educate yourself, to put yourself out there, to network, and to think holistically about your wealth and what it's doing for you. So, you know, if we can be any help at Cityside Capital, I, of course, am happy to pick up the phone. And I'd also say, you know, direct phone number to reach us, 844-289-1075. And our website is citysidecap.com. You know, we love speaking with investors or prospective investors and providing value in any way possible, because I believe the world is a place where we should interact. We should help continue to grow. And if, you know, just because you take a step forward, you need to reach your hand behind you and help pull up the next person right behind that's on their way and on their journey up. That's what we embrace. That's what me and my partners, we try to live by. And there's a big enough pie for everybody. It's important that we educate. It's important that we think about what's out there and we try to make our future as real as we want it to be and on our own terms.
That's beautiful. Thank you. What a great way to wrap up. And it's super interesting. I love everything you said. I mean, you had brought up earlier, and you know, having an intelligent life design. That's something I think, sadly, we don't always feel like we can, you know, design our lives, whether it's our career or our investments, and we do sort of just follow what is comfortable, or, you know, maybe even easy. I mean, this is maybe a little less easy, but maybe more lucrative, and maybe more exciting, maybe more fun. So there are a lot of, you know, I think we forget that investing really should be fun and exciting and something that we can get into, you know, and sometimes those 401ks, they're just sort of, you know, they're off to the side doing their thing, and we don't really get that excited about them. So, yeah, right. Thank you. Yeah, really, really great information. I know there's plenty more where this came from, and I would encourage people absolutely to get in touch with you, go to your website, listen to your podcast, and hey, you offered for people to call you. So people, that's a great opportunity.
That's right. That's right. Well, thank you, Michelle. It's a privilege to be here, and yeah, let's you know, take control. Nobody's coming to save you. It's up to us. So, yeah, make your future what you want it to be.
Thank you. Okay, I love that. That is living a limit-free life. So I'm going to just wrap up on that, and thank you, UBN Go, and thank you, listeners, for being here. We love it when you listen to the show. We know you're learning from these shows, so take it in and take action with some of this great information. And if you like the show, give us a little 5-star rating. We would love that, because we would love to bring more great guests like Paul onto the show on a regular basis. So thank you for being here. We'll see you next week.